Asia shares in limbo as dollar takes the lead. Sydney Asian stocks have been left in limbo on Friday while the US greenback made all of the strolling as recession clouds accumulated over Europe and highlighted the relative outperformance of the US economic system. Added worries approximately the fitness of China's financial system saw MSCI's broadest index of Asia-Pacific shares outside Japan ease 0.1%, to be down 1% at the week, and had the yuan en route for its worst week considering the fact that the yuan fell beyond the psychological 6.8 per dollar mark and became within a whisker of striking a two-year trough. CNY. Stimulus hopes stored Chinese blue chips flat, while South Korea lost 0.4%. Japan's Nikkei held consistent, helped in element by using a renewed slide within the yen. S&P 500 futures eased 0.2% and have been little modified on the week, having again and again failed to clear the 200-day transferring average, while Nasdaq futures slipped 0.2%. EUROSTOXX 50 futures dipped 0.2%, even as FTSE futures edged up 0.2%. The threat of higher borrowing charges hung over markets as no less than 4 U.S. Federal Reserve officials signaled there was greater paintings to do on hobby fees, with the sole difference being on how speedy and high to go. Markets are leaning toward a half-point hike in September, but see a growing danger of a 75 basis point BP hike presently a chance. Rates are seen peaking at the least at 3.5%, even though a few Fed contributors are arguing for 4% or more. There are no signs and symptoms that the labor market or inflation information are slowing sufficiently for the Fed to declare victory on inflation, said Brian Martin, head of G3 economics at ANZ. We see upside dangers to the Fed's inflation projections, and we count on those and the dot plot to be revised up in September, he introduced. We have revised up our year-end Fed price range rate forecast by 25 BP to 4.0% and now assume 350 BP hikes over the rest of 2022. All of which underlines the significance of Fed Chair Jerome Powell's August 26 speech at Jackson Hole, commonly a seminal event at the important bank calendar. The bond market is definitely on the hawkish aspect, with 2-year yields 33 basis factors beneath the 10-year yield and flashing recession warnings. Dollar in demand. The R alarm is likewise ringing in Europe and Asia. Chinese financial signs have been dismal this week, with only the desire of regulatory reprieve and government assistance maintaining a bid beneath Era and Belongings shares. HK China issued a drought alert on Friday. After half a year of battle in Europe's east, natural fuel costs hit a file-last high on Thursday, including to an inflation pulse that is certain to drive greater painful policy tightening, exacerbating the chance of recession. The gloomy financial outlook has seen the euro drop 1.7% to date this week to $1.0070 and returned closer to its July nadir at $0.9950. The dollar has additionally received 2.0% on the yen this week to reach 136.38, the very best given that past due July. Against a basket of currencies it was up 1.9% for the week to 107.66. Sterling became every other casualty, dropping 1.8% for the week to $1.1917. Investors fear inflation in Britain at a stratospheric 10.1% will lead the Bank of England, BOE, to preserve hiking and in fact force a recession. The cost of living crisis noticed British consumer sentiment plunge to its lowest on record in August, showed a monthly survey from information issuer GfK. Strength inside the salary and rate records have raised the bar for inaction, and we now suppose the BOE will need to see clearer signs and symptoms of a tough landing which will pause, said analysts at JP Morgan NYSE, JPM, who raised their rate forecasts via 75 foundation points to a few percent. We search for a two-sector recession starting in 4Q that affects in a cumulative 0.8% drop in GDP. The upward push within the greenback has been a headwind for gold, which has shed 2.4% on the week to date to $1,758 an oz. GOL. Oil prices had been a bit steadier on Friday, however nonetheless down at the week, with Brent having touched its lowest when you consider that February at one factor on worries approximately demand. Brent turned into down 45 cents to $96.18, while U.S. crude fell 38 cents to $90.12 in line with barrel.